I think the domestic retail investors are really maturing. We have now 13 crores unique investors, and they've been able to provide a lot of resilience. And many of them have really learned, that it is better to stay long, it's better to stay invested, and not to get panicky over the
Understood.
market downturns, which are inevitable. Corrections are inevitable in a market.
Do you feel that the Indian markets are heading into a more volatile environment, given the balance of external risks and given the domestic story in India?
I think the volatility has to do with many of the global events that have taken place of late on the trade side. But then I think these are also fairly under the, I would say, it's a new normal, basically. I think the volatility is a new normal and the markets have learned to live with it. But then volatility in India is not exceptionally higher than rest of the world.
Thank you for that, sir. Let's move on to the rules for SME IPOs, and SEBI has been tightening the rule book in that area. But it's a balancing act, isn't it? How have investors, pre-IPO, SMEs and the broader market responded to your actions?
I think it's also a kind of looking at data and learning. And while SME IPOs have facilitated the entry of some of the SMEs, we have a very large number of SMEs. So given that SME IPO is a very small fraction of SMEs that we have, access to capital market is being provided through exchanges, and we have, of course, responded to some of the situations and slightly tightened the system of clearances and norms, entry norms.
Let's bring in the NSE angle if we can, Mr. Pandey. Is SEBI fundamentally opposed to an NSE listing?
Not at all.
What needs to change within the NSE for SEBI to approve a listing?
I think there are certain issues which are being discussed and flagged, and in my belief is that they're going to be resolved soon.
In your discussions with the NSE, are you getting any clarity then on whether leadership there is making the necessary changes that you have suggested? And just walk us through what needs to change, whether it's on the litigation side. I know that there are issues with the clearinghouse that you have flagged, which we will get onto later. But can you be a bit more specific, sir, on what needs to change at NSE to facilitate a listing ultimately?
I think all of the issues will be resolved. I think that much I can say, both on the governance, litigation, technology, all of it. It's possible to resolve. I think they're quite amenable to solutions.
Above all, is there any progress on the NSE clearing operating independently, which has been among SEBI's requests? And what progress or otherwise is being made on that front?
There has it's not been a definitive direction from SEBI. It was put out as a measure of public consultations in November 2024. Is a possible way whether we could do that, but there are different models in the world, and there is no one model which we can say is the only way we can work. So there are very much possible to resolve things and still move ahead.
All right, sir. Let's talk about the rules of the road in a bit more detail about when it comes to futures and options speculation. Why did SEBI feel the need to restrict F&O trading in India at this point in time?
We aren't really restricting it. We have, I think we had an excessive retail activity on some of the products, like it takes options only on the expiry day. The rest of the future and options are in any case going on. And
understood.
On the index options weekly expiry day, we had an exuberant activity on the expiry day. which was creating some distortions.
So you were concerned that excessive speculation by retail investors in these parts of the derivatives markets could lead potentially to a market effect.
I mean, to that extent that, they have been losing money, and which is our study report pointed out over the last few years. So we are also cautioning.
How does SEBI justify increasing oversight while simultaneously relaxing the gross position limit? Any thoughts there, sir?
I think we had proposed in a consultation paper some of those issues which have been responded to in a wide variety of ways by different players. We have received more than 800 comments, public comments, and following which we will be able to formulate our position very soon, possibly within this month.
And what is the longer-term vision at SEBI for the derivatives market regulation, given the recent changes that have been implemented and that you plan to implement?
Derivative market is an important market for both hedging and price discovery. And so therefore, in fact, the market will also diversify further. And SEBI recently has given in-principle clearance for energy derivatives in future.
Let's turn to finfluencers. Your thoughts there, and how much of a threat do they represent to the smooth running of the marketplace and also investor confidence?
I think there is a big problem, not only in India, worldwide. We had discussed this in ISCO meetings earlier in Qatar. And the entire ISCO, we have been engaged with this process of both platform providers to check the sort of unscrupulous elements, as well as also the issue of influencers. In cases of influencers, we have registered investment advisors and research analysts, which actually have a code of conduct. But if there are influencers on social media which violate this code of conduct, we are constrained to take them down with the help of platforms. So far, we have been able to take down many such influencers. And moreover, we have also mandated as a market regulator that they would not be able to access the advertisements of the registered regulated entities unless they are registered themselves with us as registered investment advisors.
So as you see it, these finfluencers are breaking the securities law and regulations.
That's right.
What is the thinking behind and the rationale behind not allowing these finfluencers to use live pricing, instead referring to 3-month-old stock quotes? How does that help?
I think we have to take a situation in a balanced way. We have all this is available all through. The prices are available all through, and the Indian markets are very robust. So we don't need influencers to be showing live prices.
And is SEBI working on a broader investor education as we see this rise of the retail investor, especially the younger generation that could be duped or taken in? And this is a cohort, an investing cohort that is consuming more social media. How are you addressing that part of the market that is growing and that could be vulnerable?
You're right. I think this is a very important area to work on in a variety of ways. And we are SEBI and its entire ecosystem, which includes market infrastructure institutions, which is also market intermediaries, and and other parts of the SEBI ecosystem will jointly come together with a plan of a much wider thing, apart from what everyone is trying to do in a much more coordinated fashion on the various aspects of investing awareness. Is not only responsible investing, but also safe investing, particularly from safety from the cyber frauds that many investors are sort of getting duped. And we need to widen our approach, also we would actually seek a much more active participation of the people at large, or we'll seek, their own ideas how to go about it, because some of the time,
Yes.
we will find that we will get more innovative ideas how to deal with this scourge.
Let's bring in cryptocurrencies, Mr. Pandey. How is SEBI approaching the crypto ecosystem as it applies to the markets from a regulatory standpoint?
Well, in India, the policy call needs to be taken on crypto as to whether to regulate it. It's still not a security. It's taxed, though, by the income tax department at the highest rates. And India has also agreed to join the crypto reporting framework from 2027 internationally. And for that necessity, changes in the laws have been made so that, this could be, this information could be obtained. But otherwise, crypto is not yet regulated in India and not treated as a security. So it's not under SEBI's remit yet.
Now, let's talk about how SEBI is positioning the Indian markets for overseas investors and opportunities in the international markets. How is SEBI making it easier for foreign investors to invest in Indian equities?
We've actually accelerated the engagement process with the FPIs. We have an FBI outreach cell which can be reached out to an email, the specific email. And there are also web programs through video conferencing being done in order to learn our changes and modifications of procedures. And we have responded to some of the difficulties that the FPIs might be facing in terms of registration and also tracking their applications. The application processing time for registration has come down considerably, and the average time taken will be about 30 days now.
Are there any countries that are part of a blacklist, for want of a better description, that SEBI does not want to invest in India, that are barred from investing in India?
No, I think we have a framework which is there. I don't want to specifically say that, but I think the framework provides for all the details and how they have to be given. And increasingly, we are making it possible for them to actually do it online without physical documents. And we are also encouraging them to use the digital signature in India, which is easily available. They can do it online, and so that they can file their documents without physically delivering them through, couriers.
Understood. And when you look at the global narrative right now, India is becoming the China offset. Can we expect, in line with that, more secondary listings via instruments like depository receipts, for example?
Let's say we have got some proposals. We are looking into it.
And how close are you? Can you give us a little bit more detail on that? How close are you to seeing that come into effect?
I think this is a preliminary proposal at this moment, so we will need to examine.